Let's talk about how you can make this year your best financial year ever. Over the past year, I was able to increase my investment portfolio by 43% by implementing these practices, and I thought to myself, how could I have done the last year even better? I want to give you some actionable steps that you can take to drastically improve your finances going forward, and share things that I'm implementing this year to make this year even better than last. Now, it wouldn't be right for me to kick this off without saying you have to start investing. Hopefully, if you watch me regularly, you'll be now investing on a consistent basis and you're on the right path. With recent data coming out from the government that shows 56% of people have either stopped investing or saving, it's never been so important. I won't spend too much time focusing on the specifics of this as I've got so many videos you can watch to get started. But let's just remember that for every 1,000 you invest now, with an average return of 7%, in 20 years time that's 4,000. 10,000 becomes 40k, and once you have 100k, it becomes 400,000. Without lifting a finger, you would essentially quadruple your money. I know that may seem blurry at certain points because you'll have months when your stocks look down and in the red, or perhaps even a whole year or two of it. But keeping the future in mind is definitely what we need to remember. I'm going to talk some more about maximizing your investments in the next year, but also let me say this. This year, you should invest in yourself. Now, I'm not saying that in some kind of spiritual sense, like you should join a cult or run off to Bali and pretend you can do yoga like I did, although I am currently making my way through a 30-day yoga challenge with Adrian because I've got such bad hips and my body's knackered from sitting all the time, so shout out to Benji. But the type of investing I mean is spending money on things that will get you ahead financially. The problem is here though, we've almost come to this weird era where we're almost at the point of the anti-course. And it's because there's just so much crap out there. To be blunt, people are selling courses because their market is too saturated for them to do it themselves. A prime example of this is things like selling custom products on Amazon or drop shipping. Or even worse, the reason they've got money in the first place is because they've sold courses. I mean, I hate the saying those who can't teach, as my partner is a teacher, but in this case it's actually true. I was thinking about this, that if I were to package everything I know now and give it to myself at 18 and charge, say, $100 for the course, today I would be at least 200,000 better off, which actually blows my mind. And in actual fact, when I left university, and admittedly I was one of the lucky ones, I lived at home and didn't have ridiculous loans. I think my university in all cost about £2,000. But the skills I left with didn't really give me much chance in the real world. Today, people would be paying £50,000 in debt to get to that level of education. And what's worse now is people don't even pay off that debt, it just lingers above them forever. But when I left university, I took a course on Udemy, which taught me how to build websites for $50, and it helped me run my business for the past 10 years, which in comparison is crazy. If you can find something that puts you in a better financial position by investing in it, the return on investment can be phenomenal. I couldn't even comprehend how much I've been able to make from a $50 course. Admittedly, there is a lot of information for free, like the content I posted here on this channel. But if someone actually asks me what to watch first, it can be difficult to encompass everything in one video. So if you can find something that lines things up like bam bam bam, then it's a no-brainer. A couple of other quick examples of this here is I invested on a course on making YouTube thumbnails more clickable and the psychology behind them, and I'm already a trained graphic designer. But this has helped me make better thumbnails and get more clicks. I've also this week just signed up to a $2,500 workshop which will help better my YouTube skills, and I've even bought a book called The Science of Storytelling so I can get better at script writing, communicating my points, and all in turn will make me more money. This could even be just getting that extra qualification which may help leapfrog you to your next position. So explore if by investing in this way you can achieve a solid return on your investment. It's all about getting things in order to try and get things done quicker. Sure, I could spend 2 years learning something for free or save time and pay to get it all done in a logical and efficient order. Which brings me nicely onto my second point, which is streamlining your finances. But first, I'd like to thank the sponsor of today's video, XTB. XTB is an online investment platform that offers stock and investing services. Founded in 2002, the company has since become an industry leader, offering advanced technology on a user-friendly platform. The company is regulated by the Financial Conduct Authority and has received numerous awards, including Best Mobile App for Investing. They've recently launched their investment plans. This gives XTB customers the flexibility to design a personalized portfolio of exchange-traded funds, or ETFs, ETFs. They can use their smart filter which aligns with the customer's risk tolerance. The plan will then automatically allocate their invested capital to each ETF according to their designated percentage allocation using Auto Invest. Over 350 ETFs will give you exposure to a range of sectors and industries from different countries, and you can start from just £15. Best of all, you won't be overpaying. Commission for investing in ETFs is 0%, a 0.5% currency conversion cost may apply, and what's great is there's no management fees. They're definitely worth checking out, and I will pop a link in the description down below. One of the most beneficial things you can do today is give yourself a solid platform. The best thing you can do is get yourself net positive. What this means is being above water before you start. There's little point in me telling you to invest if you've got £10,000 in credit card debt. The total outstanding credit card debt in October 2024 came to £67.9 billion, an increase of 8.5% year on year. Average for the year was $2,417 per household or $1,276 per adult. Pay off your debts first. The simplest way is to pay off the highest interest rate first. Now, of course, not all debt is bad. Student debt you'll probably never pay back, so the general advice is to just ignore it. And the average debt per household last year was $65,756, which actually I think isn't too bad when you realise that figure includes mortgages. Now, although we all want to pay off our mortgages ASAP, your mortgage really isn't the worst debt to have. It affords you a better standard of living while you're younger, and it's also a home. And best of all, it's an appreciating asset. What you want to do, on the other hand, is get rid of depreciating assets. Yep, those things. The amount of people I see who have multiple cars on finance in the household is crazy. They're handing them back every 2 years to get a new one. I'll get a BMW this time, or maybe a Mercedes. A lot of them will even just get a slightly newer version of the same car. At the same time, they're complaining about the cost of living with a £600 per month car contract. What you have to do is remember that although it seems great handing it back and getting a new one, the salesperson is secretly laughing at you behind your back. That's why the last time I tried to buy a car, I was offered car finance over 10 times before they finally accepted cash. And the reason is because it's a complete trap. And I know that can be hard to get out of, but all you need to do is simply refinance the car yourself. Even if you are still paying monthly, get it paid off so you can eventually own it outright. Also, take a look at any other subscriptions you don't need. Sky TV is pretty much the biggest con of the century now. The staff even tell you to call them each year saying you're going to leave, just so they will give you a reasonable price. So cancel that and any other subscriptions you aren't using. Just think how much you could get back investing that money instead. And keep in mind that 4 times mentality. A $100 course on Udemy would get you much further than your £100 per month subscription to Sky. And speaking of subscriptions, you can subscribe to this channel for free. There's loads of other money-saving tips like buying cheaper food alternatives, which I think are pretty straightforward, which you can shift towards eventually. But what I'm talking about are quick wins that you can do today. Once you've got that streamlined, the next thing to do is streamline your investing. This is one of the biggest steps that I've taken this year, which has gotten me the furthest. It's also something I've realised is one of my biggest mistakes that hopefully you can avoid. What you need to do is simplify your investments. First, you need to get your accounts right, which I will cover in a different video as it's too long to cover here. But then all you need to do is buy 1 or even 2 index funds. Set up your automated savings plan to buy into it each month so you're averaging into it, and set and forget. There's 3 reasons you need to do this. First is that it removes distractions. There's no point wasting your time checking your stocks every day or trying to analyze a company's finances in case you can work out a potential entry and exit point, because it's a waste of energy. 99% of people can't beat the market, so there's a good chance you probably won't be the exception. Secondly, by trying to do this, it actually ends up costing you years, where you can underperform and you could have simply put it in an index fund. If I would have simply put my money in an S&P 500 fund over the past 10 years, I would have done way better. I still did okay, but it could have been much easier. And thirdly, it wastes your mental capacity. It might not seem like it, but even by looking at that app, it's not a quick 10-second look. Once you look and you see that your stocks are down, it puts you in a negative mindset, and it will still be on your subconscious even if you don't think it is. There's a clear pattern I've seen here where most people who actually achieve financial independence and retire early put money away consistently into one index fund and work on making more money. just copy what works. People don't really like to say this, but you should focus on making more money. Without a shadow of a doubt, this is a key to really getting ahead. It may seem obvious, but it's true. You can be smart, and if you start investing early enough, I have friends who have smoked me on half my salary, but there's a clear correlation between people being higher earners and retiring early. This partially comes from the fact that when you're in the higher tax bracket, the relief from a pension is almost a no-brainer to avoid 40% tax. So more people are forced to invest. But also, money makes money. If you can hop companies and get a promotion, consider doing it, or change your career path. But I will say, do not sacrifice your mental health to do so. It's not worth earning more if it will make you unhappy. I've seen a growing trend recently where people are increasingly unhappy and they're considering pay cuts, but they want to stick it out as they know it will help them retire sooner. Perhaps instead work on a side hustle you actually enjoy and you have an interest in. Then it won't feel like work. Like I've managed to do with this YouTube channel. You should ignore the hyped up stuff you see all over social media like YouTube automation, claiming you can do zero work and make thousands passively. They wouldn't be teaching people if they could do it themselves. Why wouldn't they just make 10 YouTube channels or 100 YouTube channels and make $1 million a month? It's just not logical. Instead, aim for something realistic, maybe like a market stall at a local craft fair or helping a local business with social media. Things that work with local businesses where you can make an impact and have a niche. One huge thing you can do is just ask people for advice. Find someone that's doing something similar to what you would like to do and ask questions. If you show an interest and you're genuine, if they have time, they will help you and they'll do it for free. There's no shortage of ideas here. You can even talk to a robot now and ask it how to make money. Take advantage of the things around you. Now, talking about advantages, there's something I really suck at, but I should do more of it, and that is credit cards. I'm 34 and I've actually never had a credit card in my life. I've never liked the idea of having debt except for my mortgage, so I've never wanted one. There's always been this huge shift towards building up credit rating, but I've always found that, to be honest, if you don't have bad credit, then your credit is generally just fine just by having your basic subscriptions. So I've never really focused on it too much, but to be honest, it's something I've missed out on, because if you can keep on top of it, you can really milk bonuses. Some of them offer huge cashbacks and other offer air miles, which you can use towards trips. Have a look into these and work out which could be best for you. Something that I do, however, which a lot of people don't seem to know about, is I trade all of my Tesco points for Hotels.com vouchers. Over the past 5 years, we've had at least 4 nights away for free per year. They make really good breaks away and you can save a fortune on hotels. We probably get at least £500 worth per year. This next year, I'm going to get at least one credit card to start taking advantage of it. The deals do change often and you're probably best using something like Money Saving Expert, as they have a full team keeping on top of it. The British Airways Avios card is one that I'm currently looking into. Let me know if you've got one, as I would really be interested to hear your recommendations. Now let's talk about what I think could really help you massively this year with investing. Last year I set myself quite a stupidly high goal for investing of £254,000. I didn't actually hit this goal. I ended up on around £213,000, but I was still up 43% for the year. Admittedly, I do like setting quite big goals to strive towards, but I can't help but then feel disappointed when I don't hit them. This year, I've actually decided not to set a big investing goal and actually thought about this. When I asked about setting a New Year's resolution for the year and how many people haven't set one, and I then thought about how unachievable New Year's resolutions actually are. I mean, how many people do you know that have set a resolution and then 5 weeks later they've already broken it? But then I stumbled across this book called The 12-Week Year. The book provides a framework for achieving more in 12 weeks than more people do in a year, which makes your goals seem much more attainable. What this does is give you accountability, and it suggests a scorecard to help you track your progress weekly to see how you're progressing, and it helps you see how you are achieving those goals. And I thought this is actually a genius idea for investing. Instead of setting a big number you're heading for like 100k, why not break it down into 10k chunks and have a scorecard you fill in each time you reach 1000. That way you can feel like you're actively progressing towards a goal rather than it being so far in the future it feels like you'll never get there. It's the same way when I go for a run. I'll often think about running to the next lamppost or to the end of the street rather than thinking about the total distance, as it feels so far away. Or like when you're running down a long road and if you look towards the end it can feel like forever. Then what you can do from here to help you hit those micro goals even quicker is utilize bonuses. The first thing you need to get right with investing is making sure you have enough money to retire, and that's what most of us will aim at doing. but most people aren't even using the bonuses from pensions. For every £1,000 you are trying to invest, it's only £800 of your own money you need to put in if it's within a pension account, because you're going to get 25% bonus as a top-up. And the lifetime ISA is even better, as it's the same bonus, but it'll all be tax-free when you take it out. So if you're doing it right now and you only have an ISA, get yourself a SIP and a lifetime ISA and start investing into them ASAP. I'll be breaking this down in a future video, much better for a huge comparison, as you'll be able to see the benefits much more clearly. But if you start implementing these steps today, you'll be putting yourself in a much better financial position and you will smash the next year. My own micro goal is to complete my 0 to 100k series. I'll have another update on this coming soon, and here is the latest episode if you missed it. I'm super excited to get this one complete and see where I go from there. I think this year is going to be great for all of us, and remember, you've got this.